All right, crypto crew, the market is waking up to something huge, and they haven't even realized it yet. The Fed didn't just cut rates. What they did was they opened up the liquidity river. They turned the liquidity river back on. No fireworks, no sugar high, but just a slow, relentless liquidity drip that always shows up in Bitcoin and in the crypto markets first. Today, we're going to be breaking down exactly what the Fed did, why they did it, what they were concerned about. And I told you guys the bond market was the market, it runs everything, and they were concerned about it and they followed our exact script. So welcome back, crypto crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already, and make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's get right into it. Actually, before we get right into it, I want to just say one thing. Before we begin, I want to actually go over. I love all the comments. I think they're awesome. Please just keep dropping comments for us and understand that we do read them all. And, I was reading a few just off our recent video and I said, oh my gosh. I mean, they made me fall off a chair. I said, okay, I got to respond to some of these guys because these guys are getting a little bit ridiculous. But hey, you know what? Just keep posting the comments. That's the most important thing. So today I'm going to run some comments through what I'm calling the hater hydration station. Now, again, I love all the comments. Keep them coming. And, let's just go over some of the comments that we can run through the hater hydration station. I mean, here's one. Same guy comments twice. Actually, I'm responding basically to his comments. Like, my recommendation, do a video with one sentence. I have no effing idea what's going to happen. If anybody tells you that they know what direction this thing is going, they're lying. Nobody knows. We're always at the mercy of the marketplace. And like I said, we could come up with a good idea of what should happen, but we need to have plans in place. Now, this gentleman also comes back, or I'm assuming it's the gentleman. He says here, where is it? Something about his 9-year-old. Whoa, right here. Woo, what a great trader you are. Fantastic. He was actually reacting to the 3 scenarios that we had. All right. Now, here's the thing. My friend, I just want to say this to you, okay? Trading is not fortune telling, okay? On a bank desk or any professional trading desk, if you only gave one direction with no contingency, you'd be walked off the floor before lunch. You'd be tarred and feathered out in the streets. They say, get this guy's out of control. I mean, there's no way you want to trade with this guy right now. So what we do as professionals, we map out scenarios, we map out risks, and we map out decision points. Amateurs demand certainty. Now, if you want astrology, the only thing I can say is that you are at the wrong channel. Go find yourself a GAN channel. And you could wait 10 years for Mercury to re-enter, retrograde or whatever they talk about over there. But if you want to understand how markets actually work, just stick around, leave some comments. No problem. If you want to keep leaving those comments, great. But we're really happy to help you out. We're really happy to help you navigate the marketplace. So, hey, also, guys, listen, I came up with the hater hydration station today. I said, that's a cool name. I like that name. But tell me what you think, all right? Because I'm thinking about doing this a couple of times, not all the time. If I find some really funny comments or interesting comments, I'd be happy to highlight them because I think it's great. Conversation is always great, right? So I got the comments control room. Tell me if you like the comments control room. Tell me if you like the fame and flame wall. I like that one too. I also liked the noise reduction desk. So tell me, leave some comments for me. Tell me which ones you like. Should it be the hater hydration station, the comments control room, the fame and flame wall, or the noise reduction desk? Let me know. Put them in the comments. All right, let's get into it. All right, so the Fed did exactly what we thought that they would do. Okay, why? Because they couldn't, keep pretending that the labor market was fine and that growth wasn't rolling over. So they cut right on schedule. Now, of course, the CME, had it predicted, right? They had like 87.9% chance of a rate cut. And I did, express a little bit of, I don't know. I was a little bit worried about it, and I'm going to get into it why. I mean, I'm totally, you could look back on my videos. All right. So, I'll just be upfront and I'll explain to you what I was really, a little bit worried about. And that happened to be the 10-year bond market. So I won't keep you in suspense. But right now, if we look at Bitcoin versus like quantitative easing, quantitative tightening, right? So we said quantitative tightening was effectively done. That was in the marketplace. The rate cut was in the marketplace, and we're going to get into that in a second, okay? But we said the next move would be a pivot towards balance sheet expansion without calling it QE. Remember we said that? I said they can't call it QE because it's a bad word. It's a dirty word for like the bond market. So they have to call it something else. We package it something else. So what they did was they started buying T-bills, and they don't call it QE. So really what they're doing is they're going to be expanding the balance sheet, but quietly. And that's fine. Trump's going to get what he wants by the Fed doing these operations. All right. But you can't come out, as I said in yesterday's video, Trump can't come out and say the next Fed governor has to be completely for, cutting rates. You can't do that to the bond market because the 10-year controls everything. It just does. Okay. So now we said watch for liquidity tools, bills, reserves, and funding operations. Bang, they did it. They launched 40 billion of bill purchases under what they call the reserve management excuse. The exact playbook that we highlighted. We posted an X post about it, and that's why I tell you, follow us on X. Okay, look, the Fed just set to repurchase 40 billion in T-bills over the next month. You know what the crypto is going to feel this. Now, here's the thing. The Fed balance sheet, all right, they use the same language that we predicted. We said the Fed would cut, but try to look responsible by warning that they're not starting a full easing cycle. Powell literally delivered that script. Bottom line, the Fed blinked. Okay, they started to move into quantitative easing without calling it quantitative easing. Okay, now, why? Why did they do this? Now, here, to be completely open, honest, and to be completely fair, what I'll say is what I wanted to stress something. I was worried, and I thought that they would, okay, maybe it was a little bit of I was a little bit crazy at the point, but I was really looking at the marketplace with 87% odds of a rate cut. I said, if they don't do it, this thing is going to whipsaw. It's going to really crack down. But, they did do it. Now, I was worried that they might skip the cut entirely to keep the 10-year bond under control. Okay. Now, yesterday I was having a conversation before the Fed did anything. Where's my 10-year bond? Where is that 10-year bond? Did I miss it? Where is it? Hang on. Let me find that 10-year bond. Right there's a 10-year bond. Yesterday, before the rate cut, or before they actually, before the whole gig, man, before the whole gig, the bond yield was at 4.21. I had a discussion with a fellow trader that he trades the stocks, and I was like, dude, this is dangerous because we always said that if it crawls above 4.5, the S&P is going to tank, Bitcoin's going to tank. They're all going to get hit. But what the Fed did, what Jerome Powell did, to his credit, was he jawboned the bond market to capitulate lower. Very, very important. I'm telling you that this marketplace that you're staring at right now is the most important marketplace. It runs everything. It runs credit cards. It runs auto loans. It runs mortgages. It does everything. This is the financial heartbeat of the United States of America. All right. So what they did was there was a real chance they'd hold steady with not cutting the rate. And then they would say, well, we'll look at data in the new year and we'll make a decision then. It looks like we could probably cut rates after inflation cools, something like that. So, but they didn't go full hawk in the press conference. Instead, Powell split the difference. I got to give him credit for this. Okay, I have to give him credit for this. They did cut, but then they toned down the future path of cuts, signaling only one cut next year. Now, that guidance did exactly what it was designed to do. It cooled the bond market. It kept the 10-year from exploding upward. It avoided a disorderly move in duration. So equities got the cut. They took off, right? But crypto did not get the sugar high of a full 2026 cutting cycle. And here's the key point. The real gift wasn't the rate cut. It was the liquidity. And Bitcoin and all crypto will pick up on this. That's why I said in the open, they're kind of sleeping to it right now. Okay? 10-year bond right now is 410. Beautiful sight to see. Beautiful sight to see. You want that thing coming off. You want it cooling down, because then you know what's going to happen. They're going to keep buying T-bills and they're going to keep flooding the market with money. And yes, you're going to have to learn how to trade this stuff, because it's not going to be, everybody saying, oh my goodness, it didn't go up. Correct. It didn't go up. I mean, and I'm going to be going over that today. And you're really going to have to learn how to trade this thing. So that's why I suggest you get into a pro group. Now, there's also a couple other comments that I'll address later on. But anyway, the Fed turned on really a slow-moving river. How they do it? Okay, quantitative tightening officially over. Bill purchases restarting. Reserves are rising. Balance sheet is creeping up again. So this isn't the flood of QE liquidity. This is like a quiet, slow-moving river that shows up in Bitcoin and crypto over time. All right. So yes, we should expect potentially a Bitcoin to dip, maybe even test the lower ranges. That's what this whole other chart was about, where everybody got so upset about it. 3 scenarios. Right? The guy says, I got a 9-year-old that can do that. Well, really, then he should be trading for you. All right. We gave you the 3 potential scenarios that could happen. We said in our video yesterday, or I said that, Frank was thinking if we could get through 93, we got a good chance to run to like 100 or really 98 or so. I said, no, I think the breakout really has to occur above 95. Don't believe me? Go back and look. I said, there's some resistance up there, so basically you could sell it up there, tight stop loss, because I think we're going to return if we break through 89,000. I said we're going to return back towards the 87,000. Don't believe me? Go back and look at the video. That's why I got all these stupid lines on my chart, right? I told you 91,231 is an important point. I said 95 is actually a resistance level. We got up to 94. We came back off. I said if you break the 91, you're going back down to 89, right? 89.3. We're there right now. If we break this, we're going back down to 87. That's why my stupid lines are there. Okay? They're excellent reactionary levels. I've been doing this for over 30 years. Do I get it wrong? You bet. You bet I get it wrong. But at least I have my scenario that I'm looking at, right? And that's what you need. As a trader, you always need your scenarios. But anyway, all right. So we're going to be going over exactly what Bitcoin can do. Now, we're thinking that Bitcoin could actually do this. We said this, right? We said it could actually dip down by the 80,600 level. Remember, we talked about that. Right. Now, but we also believe that it's going to be pinned down there, supported by this underlying liquidity bid coming from the funding markets. Plus, in 2026, we got the big boys coming in. Who? Oh, come on. Vanguard, right? We talked about Vanguard. We talked about Merrill. We talked about Schwab. They're all coming. They're all coming. Yeah, and unfortunately, they're going to run this thing. Now, also, we have to keep in mind that we got JP Morgan and we got Morgan Stanley Capital International that is after strategy. So it's very, very important to basically make sure you keep your eye on where it is. This guy right here, IBIT. Here's one of my silly little lines right there. I said we got to get above 55. And guess what? We haven't been able to do that yet. Here was support right there at 50. And good old look at the market bouncing off the point, trying to get up, and it's actually cooling off again right now. So those are those silly little lines that Tom puts up. Okay? Right. All right. Very, very good. Now, so what we're saying is the three scenarios could play out. So we didn't get the launch or the next vertical move yet, but the liquidity will give us those movements over time. So, simple trader terms, we got no sugar high from this. We got a slow liquidity drip. So, Bitcoin dips, but it doesn't die. Okay? That's the most important thing. Bitcoin can dip, but it's not going to die. And we're in for some wild times. Now, I'm going to give you a little lesson, okay, from 1910. Okay, 1910. Before we go into the daily technicals, Wyckoff wrote in 1910, and as you know, we're Wyckoff fans here. We talk about Wyckoff screaming from the grave. Wyckoff was an incredible technician, just fantastic, better than good old Gann would ever be. You know, Gann is a joke, man. Really, really, I'm gonna tell you something. And I know there's a lot of Gann traders and stuff, but you know, if you try to read Gann, I mean, he talks out of both sides of his mouth, right? Then he starts talking about like astrology, and he starts talking about all these crazy things. If you go back into now, I didn't do this research. A gentleman by the name of Dr. David Paul did. But he passed away, unfortunately. But you know, he was a Wyckoff trader, and he was also interested in Gann. And he went back and he studied Gann. He said Gann, everything that he said about astrology and square of nine and all this other stuff was just nonsense to sell courses. He was really just a support and resistance trader, and obviously he wasn't that good at it. Because when he died, he had a modest house, I think, in Nebraska. It wasn't anything special. He didn't really have any massive amount of money. Now, if you compare him to, say, Bernard Baruch or Jay Gould or to Jesse Livermore, I mean, these guys had a track record and had mansions. Okay, a mansion and a yacht. So anyway, I'm not here to really beat up on Gann, but anyway, for you guys, you know, just be cautious with Gann. It's not going to get you anywhere, in my personal opinion. But Wyckoff wrote in 1910, when a dull market shows inability to hold rallies, or when it does not respond to bullish news, it's technically weak. On the other hand, when there is a gradual hardening of prices, when bear raids fail to dislodge considerable quantities of stock, when prices do not decline upon unfavorable news, we may look for advancing prices in the near future. Now, I want to address something that I've seen, okay? Also in the comments. We are not permabulls here. We are not, late traders reacting to bear conditions. I am a trader, and we are traders that understand the plumbing of markets. Okay, so what Wyckoff is describing here is exactly where crypto is sitting today. Bitcoin is giving us both sides of the picture right now. Right now, we're dull. We're seeing dull. Okay, so, and also, we're not getting the upward break that we would expect from the rate cut, right? Because it was already priced in. And they actually quieted the bond market by saying maybe one more rate cut next year, which was more important than the sugar high that we would get. Because in the long run, if this bond market really started getting out of control, where's my bond market? Again, I lost my bond market. If this bond market really started getting out of control, we'd have crashes across the board. Okay, so it's very, very important to keep these guys in check. So right now, what are we saying? We're saying that really Bitcoin is technically weak. All right. Now, what we could see is these scenarios play out that I was talking about. That's why the scenarios were there. We saw this. Now, the second condition is showing up right now too in Bitcoin. All right. Because prices are gradually hardening. All right. Bear raids are losing some impact. Not exactly yet. It's not exactly over yet. But I would think that they would lose some impact once we get down to 80,600. And we're going to get into the short term, but I think that's the point that, is really the most important point. I think that the max fear buy area at 69 might be off the table right now, but we can't say for sure. Anything can happen. If all of a sudden strategy has to start selling, that's going to create some havoc in the marketplace. So we got so much stuff that we have to look at, right? But this is the part that most traders completely miss. We got a weak tape, but we got a strong underlying structure right now, right? So, and the reason's simple. The market's being underpinned by liquidity right now. It hasn't started fully flowing yet, but the river is there. The slow-moving river, the Fed just reactivated. It's not a sugar high flood of QE, but that subtle, steady bid that keeps the floor intact for us. So yes, we may dip lower. We may revisit some deeper support levels that we have been tracking. But Wyckoff, we're here today. He'd say the same thing, today as he said over a century ago. When the bear raid fails, when the market refuses to break on bad news, that's where the advance is born. So, all right, let's get into the short term. Right now, we're looking at our famous 2-hour chart. And we mapped it out for you. That's why my crazy lines were there. I said 91,231 is a very, very important point. It goes back to February of 2025, the beginning of the year. This is the point that we launched off of. We went up to I think 104,000 before we actually came back, went through it, and went to the all-time low of 74,000 odd. So very, very important point. Right now, we got resistance that's sitting at 95,000. We got support, short-term support. Short-term support really right now at this ledge right there, 89,000, say 3, 89,004. Right here is a short-term support. If we break down through this, you can expect the market to come and test the 87,000. I would love to see a deep retest of the 83, the 82 would be awesome. Okay, I think that's a great area to accumulating. Now, in our pro group, we have, dollar cost averaging levels that have been activated in some coins. I saw some comments, and I'll get into it. I was going to get into it in altcoins, but I'll mention it now. Like people said, you haven't mentioned HBAR in months. If you're in our pro group, we talk about HBAR all the time. Okay, we love HBAR. We think HBAR is a sleeping giant. Still do. Okay, but we just haven't seen any real good trade setups for it yet. All right, so but we are handling it in our DeFi vault. All right, so get into our pro group, man. You can't beat it. All right, so right now, as it stands, we got the support down at 87. Then we got a deeper support right at 83, 82. I think this area is great. Okay, main support for this whole thing, all right, is that 80,600, and then underneath it, the most important support of 78.2. 78.3, something like that. If for some whatever reason we get through that, then we're going to be testing that 74, and then perhaps that third scenario comes into play. And again, I don't know. If I knew, I would tell you. Well, I probably wouldn't even tell you. I'd say well, probably would, because I'd want to be a genius. Everybody wants to be a genius. So as it stands right now, what Bitcoin needs to do, it needs to crawl back above 91, and it needs to get over 95,000. If it get over 95,000, we're looking at 98. So we got lots of short-term trading opportunities here, but we have not seen a total hardening of prices yet. I think they would occur down at the 84, 83 level, where we start to get the hardening of prices, and then we can expect the advance to come. Now, now remember, we've also said that Bitcoin is 70% of the time, it's in puke area or just nothing happening area, and we're in it. We're in it. But there's plenty of opportunities to trade daily with this thing, all right? And there's a lot. I mean, you could be short. We went short in the pro group. They got short, I think, at 93. They took good old Tom's advice. We're down at 89. So 90,000 right now, $3,000, man. You can make just as much money trading back and forth, waiting for the movement upward to catch the trend, or the movement downward to catch the trend to make money. Okay, so we're not one-trick ponies here. We trade. All right, we trade. Now here we go. Bitcoin really, I think what we're talking about is entering like the final shakeout mode. Now, where's my final shakeout? Which is right here. Uh, this point right there. All right. The crowd could panic down there. Don't panic if we drop down there. That's what we're trying to prepare you for. Now, do we know what's going to happen for sure? No. But smart money isn't buying breakouts right now. The big boys are trying to get you to sell. They're trying to push it down. They got strategy under pressure. So that's going to play a big point, a big role coming forward. We got to watch that scenario, okay? But they're buying the blood. The best entries always feel like the worst entries, right? So that's what we're saying over here. Now, we went over the chart that confused a lot of people. I already talked about this. Decision one, decision two, decision three. But Bitcoin is actually doing today what we expected it to do with a stealthy liquidity Fed pivot. All right. So now, we got Bitcoin that actually flashed another golden cross. Let's just hope it's not a golden showers. These things take some time to actually work through because this is a weekly chart. All right, so we had four signals, we had four explosive runs. The fifth time it's here. Okay, the crowd's in disbelief. The setup, it's really louder than ever right now. But, like I said, it takes some time to work through the marketplace. But we got to wait for the true breakout, okay? Just remember, really, as we said, okay, the halving was never the actual catalyst. Bitcoin didn't rally because of block rewards. It rallied because of M2 expansion. And the Fed just gave it to us. So we got PMI recovering. We got liquidity in the river, in a river background. It's actually moving upward. Of course, the QT is done and the macro fuel is back. And so is Bitcoin. But you got to pick your points. You got to trade it. All right? Because Bitcoin is still in a manipulation section. Okay? We're still there. The big boys are still trying to manipulate it. So they could push us down into the 70s, 75. I'm not saying it's going to happen. I'm not a bear. I'm just giving the scenario out. As a trader, you just got to be prepared for it. Now, what you can do is you could watch IBIT. IBIT is very, very important. BlackRock's Bitcoin ETF, very important. If we break through 50, you could expect another dump in Bitcoin, and we're preparing for it. So get into our pro group. All right, so Ethereum. Let's go over to Ethereum. This bad boy right here. Did we not do a beautiful pitchfork? Did we not do a beautiful pitchfork? All right, here's one of Tom's stupid lines, right? Told you that if we broke up through 3,200 odd, we were moving up. I said we could get up to 5,530. No, it didn't happen. We got up to what? 4,454. Not a bad run. Okay, said that the most important point was at 3,240. If we broke the 3,240, we were drifting back down towards 3,000. Okay. It looks like we're in the play right now. We're at 3,179. The 3,000 has to hold. Ultimately, we're looking at, I would say, 2,800. And, of course, the main point down here, 2,600. So, really, Ethereum itself is still like lagging Bitcoin. It's hanging around 3,200 right now, trying to put a base in, but there's no decisive leadership yet in the marketplace. The market's still digesting what's happening. But remember, we got the Fusaka upgrade. Ethereum is going to take off. We still believe Ethereum is going way, way higher. Of course, it's going to take time. It's not happening tomorrow. But right now, as it stands, let's see. We came down to what? 3,001. We got to get over 3,000, say 400 right now. We got to get over this level right there, 3,459, to actually show that we could try to attack this 3,532. Now, if I take you back in time, and I don't want to get anybody scared if I show them bar charts. I know that you guys are vampires when it comes to bar charts, but right now, this 3,005, okay? If I look at this candle, okay, the close of that candle is 3,538. So that's really where the price should be at, because that was the last upward movement before we had the crash down. Now, once it took out the 3,240, which was actually, if you look at this candle, was the close of the bearish bar before the breakout upward to this. The market was actually defined by these two closes. Once the market broke this, it actually went down into a downward movement until we started to finally recover. So your two important points really on the downside is this 2009, 3,240, and the upward breakout happens there. Now we got Ethereum that's actually breaking out versus Bitcoin. It's trying to put the base in, as we said, but it's got to hold 2,800. And more importantly, it's got to hold the 2,600. Now we need to break above that 3,530. It's the key to the next rally. Well, now we could see a push down into support and look to buy a spring down there. So a Wyckoff spring. So if we get a push down into support where we break the lowest support level, look for a spring. You know, you can make a living on just springs and Wyckoff and Wyckoff upthrust alone. You just search for those, man. You make a fortune. You want to learn how to do it? Come in our pro trading group. We'll talk to you about it. Just ask, hey, how do I take advantage of a spring? How do I take advantage of an upthrust? We could show you. Okay. So the pattern that we see here is undeniable. It's the same as May, same as July, same as now. Accumulate, consolidate, breakout. So the Ethereum rotation phase is loading. I know we've been waiting for it for quite a while, but it's on its way. And I'm sorry, I'm going a little bit long today. Already up to 31. I was going to say 31 pips, 31 minutes. But really, we're watching this, and we're looking at Ethereum, where we want it to track gold. Now, we could say Ethereum is actually tracking what gold did, a 4-year range. We had the fake breakout. That was actually an upthrust, a Wyckoff upthrust, okay, falling right back into the range. So could have made a lot of money off of that. But, it's always easy to see after the fact, of course. But right now, we had the fake breakout. We had a violent shakeout. Gold actually broke out and pumped 142% after the setup. Now, Ethereum's really at the same trigger point. If it breaks, the crowd's going to be late. You got to position early. All right, you got to position early. That's why I say get into our pro group. Hey, so how do you get in this pro group I keep talking about? Well, it's in the same section where all the comments are left. You got the link right in our description. You click this link right there. You'll be taken over to our Telegram pro trading community. Completely free to join. Completely free to join, man. Get in. All right. We drop insane alpha trading opportunities, shorts and longs daily. Okay, so we could trade what's happening right now. And then we can look to get a better average if we want to stack our bags with Bitcoin or Ethereum or HBAR or any one of them. Hey, if you want to go it alone, we're offering 2 outstanding brokers that you can join. Okay, both low fees, fast execution, level up your trading. All right, those are great brokers. Through our links, they're offering some really good promotions. I believe WeX is offering no fees for life. And I think BTCC, of course, is still giving a $500 token giveaway. But I suggest that you come on over and you join us. Join us. Tell everybody you came in because Tom told you to come in. That would be real cool. All right, let's get into altcoins and what's going on. First, we got to talk about Bitcoin dominance, which is basically unchanged. Bitcoin dominance is up a bit, all right, because Bitcoin is going to be the star of the show for now. We told you that Bitcoin dominance could actually go back up to 60, maybe 60, 30, 60 and a half. Right now, it's sitting at 59.26. Why? Because if Bitcoin basically comes off, all right, we could actually see, Bitcoin dominance. If it'll probably be holding steady, maybe even slightly coming off just slightly. But once Bitcoin reaches those levels of support where actually it starts to move up, where the price gets hardened again, and bear raids are less effective, then you're going to start to see Bitcoin dominance rise, because everybody's going to be like, oh my goodness, I don't want to miss the boat, and they're going to go into Bitcoin first, then they're going to go into Ethereum is going to come in next, and then the alt season that we've been looking for the past, I don't know, 11 months. All right. So Bitcoin dominance can come up. So you got to be cautious with this. All right. So if Bitcoin dominance that's falling as Bitcoin's coming off, don't fall for it that, they're going to rotate into altcoins. No, just chill out, man. Get into our pro group. We'll explain it. All right. Now, if we look at altcoins themselves, all right, and we've had this chart up for a couple of days. I'll show you this chart for altcoins. We got the head and shoulders pattern, right? We need to break up through the neckline, 1.53 trillion, and then we got a chance. But right now, things right now with altcoins, again, they're still basically, risk off mode right now. BNB's weak, Solana's weak, mid caps are bleeding, low caps are getting rinsed out. This is what happens when macro uncertainty spikes. Liquidity flows to the majors and alts stay soft. It's not time yet. Okay, it's not a breakdown, it's just a waiting room. All right, so those of you who are questioning why, we're really focused on Bitcoin and Ethereum right now because those are the two stars of the show. That's why we're not hitting like HBAR or XRP or all the other coins yet, because the marketplace is in a waiting room. All right, now Crypto Crew, as we wrap this thing up, what do we got going for us? Well, we got the Fed has actually done what it's supposed to do, and it confirmed what we've been prepping you for: rate cuts, slow liquidity, next Bitcoin ignition phase. So stay calm, stay structured. Let the market come to you. Come and join our pro group. Okay, it's completely free. All right. So what else do you have to do? Well, you got to trade with your head not over it. You also have to do your own research, because I am not a financial advisor. I am a trader just like you. And do I get things wrong? Absolutely. Absolutely. So what else do you have to do as a short-term trader? You got to enjoy the party, but you got to dance near the door. I'll see you tomorrow. Stay safe, stay profitable, stay calm. Cheers.